right, well, good afternoon, everyone. This is Scott Thompson, and we are here for our Stock Investing for Beginners webcast. I want to give a shout out to Barb, who's there in the chat. The market's just closed, and hello to Rojo and Simone and Jay Richardson and all the usual suspects. Wiley, appreciate you guys taking time out of your schedule to be here. Today, we're going to be going over 3 simple steps to buying stock. And this will be applicable if you're a new investor or if you've been doing this a long time. And we'll talk about some of the nuances associated with, when you're making those new purchases. So want to jump right in and get as much of this done as we can today. Before we get started, let me go ahead and remind everybody our presentation today is for educational purposes, not a recommendation or endorsement of any particular investment, stock, or strategy. We're going to be talking about our 2 green arrow strategy today. Schwab does not recommend the use of technical analysis as the sole means of investment research. We're going to be using the paper money software program. That's a little bit different than the live version. There's some differences there, so be aware of those differences. We'll be talking about stop losses like we do pretty much every class. There's no guarantee that the execution of the stop order will be at or near the stop price. Remember also that all investing involves risk, including the loss of principal, and past performance is no guarantee of future results. So before we get into our lesson today, I want to point out that we have 8 lessons that we've taught several months ago. We went through this whole series, why to invest, how to invest in the stock market. And over the last several weeks, we've just been adding to, basically like planning your trade and managing the portfolio and how much to buy. But we did cover all 8 of these lessons, and I would highly recommend, if you're new, go back and watch these 8 lessons. Let me show you where those are real quick. On our YouTube channel, if you just go to Trader Talks, Schwab Coaching, you can find it a couple different ways. But on our YouTube channel, if you just scroll down, we have a stock investing basics watch list or playlist right here. And you can go through those 8 lessons and watch all of the different 8 lessons that we've talked about. And then today, like I said, we're going to go through some simple steps that I think are applicable. We'll call it a beginner's guide for stock investing, but no matter how long you've been investing, I think these 3 steps we're going to go over are very important. So let me jot these down. We're going to take a Word document here, and I'm just going to say 3 simple steps to stock investing or to buying stock. So the very first one that I think is important for everybody to understand is, like, what is the market doing? And there's a couple different ways that people do this. I've shown a way, we're going to go over that way today, but basically people refer to this as what's the market posture, what are the market trends, but overall it's basically, what is the market doing? Is it going up? Is it going down? Is it going sideways? Has it been volatile? Has it been kind of, just not really moving around too much? All of those different kind of questions that come from that. That's number 1. Number 2 is which sectors are performing the best, or which sectors are the top 3 is one of the ways we're going to do this. Top 3 sectors. And I'll show you how to find those. And then number 3 is buy stocks in those sectors. When? Well, when they have your buy signal. So that's the idea. This is our 3 simple steps to buying stock. What's the market doing? Let's identify the top 3 sectors. And then what we'll do is we'll, buy those stocks when they have your buy signal. And we're going to use our 2 green arrow investing plan as our buy signal for our class today. So let me go over here to our Thinkorswim platform and kick this off. Now, I've put a few chats in earlier before we started the class about the different tools we're going to use. But the first one, if you go up the top of the chat, if you just joined, if you scroll up to the top of the chat, it should be there. If you can't find it there, or you're listening to the recording, this link is in the description as well. But the way that you use these scripts is what they're called, and they're not guaranteed for time or accuracy. Sometimes there's some little nuances or things that come up when you run these things that aren't 100% perfect, so just be aware of that. But what you need is that code It's usually the last 6 or 7, sometimes 8 or 9 digits, depending on, you know, how old the script is. But if you just copy that last little piece after the forward slash, and I'm going to do a Control C, and this is how you load all of these. I'm just going to show you on this first one, and then we're going to use a couple of these. But if you go over to the top of your screen, oops. And I got a challenge here. My little icon, there's usually a gear icon up here at the top that you can click on and add those, but I don't see, I think I've got my font too large on this, so it's gone. So I'll walk you through. So up at the top right, there's a little drop-down menu that says Setup, and then it'll say, you know, Use Shared Items. And you click on that, and then you can copy and paste that link in there. So I apologize there. Not sure where that went. Anyway, so that post right there, what will come up is our grid that we use to analyze what the market is doing. That's number one, right? So right here, it looks like this. When you load it in there, it'll be in this drop-down menu of your grid. So over here at the top right on your charts, so we're on the charts, go over to the grid little drop-down menu there. And then once you've loaded that in, it'll have this LTITST, long-term, intermediate term, short-term trends, 3 charts. And you click on that, and it'll load up these charts for the S&P 500. And what we're trying to determine is what the market is doing. Well, we'll right-click here. We're going to maximize the cell. And this is just the way that I learned how to do this market posture analysis, or to look at the market trends, is to take a 10-period exponential moving average and a 40-period exponential moving average on a 3-year or weekly chart. It doesn't actually have to be 3 years, just has to be a week. Each candle represents a week of trading. And so if you think about it, 10 weeks is very similar to like 5 trading days in a week. So that's very similar to a 50-period moving average. And 40 times 5 is like 200. So a 40-period exponential moving average is very similar to a 200-period moving average. In fact, Jay Richardson, right at the beginning of our class, typed in and said, hey, the S&P is getting really close to the 200-day moving average. Now, the last time this happened over the last couple of years, you can see back here in 2023, and then we actually dipped below that 200-period moving average, or the 40-period exponential moving average. We dipped below that for several weeks here back in 25 of, you know, last year in March through about, we got back above there in May. So the last time, and this is one of those areas where longer term investors, value investors, typically look for opportunities when the market's down near that 200-day moving averages. The stock's been, or the market's been selling off a bit over the last several weeks in this case. And, you know, if it stays above the 200, people look at that as a fairly bullish signal for getting into new longer term positions oftentimes. Yeah, of course, there's no guarantee that that'll stop going there, stop going down, but that's one of the things when we're doing this top-down analysis, or we're looking to figure out what the market is doing, we start with our long-term posture. And again, this script here has these charts in there and these moving averages, and so it'll help you there. But all we're trying to do now is determine what the trend is. What's the long-term trend? And this is how you interpret this chart. If the 10-period exponential moving average is above the 40, okay, which in this case it is, we're long-term bullish. Okay, and this is not predicting the future. It's just showing what's going on right now. Okay, so right now, even though the market's been pulling back for several weeks at this point, the long-term posture is still bullish. The 10 is still above the 40. Then we're going to look at our intermediate posture. And if you just click this arrow after you've maximized the cell, you'll see this little kind of return arrow. It says minimize cell, and it'll put you back on the grid. But if you just click this right arrow here, that'll take you to the next chart. And in this one, we're looking at a daily chart. So this is a 6-month daily chart. Each candle represents one day. And all we're doing is we're looking to see where the 10-period exponential moving average is in relation to a 30-period simple moving average. Now, this is just what I learned how to do it. You don't have to use these moving averages. Just I'm showing you a way that I learned that I thought was very easy, very fast, and fairly simple. Okay, so the 10's below the 30. If we kind of look at how to interpret it, 10 below the 30, that means we're bearish. Intermediate term is bearish. Okay, so the intermediate term being bearish, number one thing that it'll probably help you understand is that your portfolio probably doesn't look as good today as it did about 2-3 months ago, right? Or a month or so ago. The market's pulled back a little bit. And so one of the things about investing, and this is a little nuance, put this in your notes somewhere, is, put yourself in this position where, usually this just seems how it works. Like as soon as you get involved in the market, it goes down. As soon as you buy a stock, it goes down. So one of the reasons that we like to do this kind of what's going on in the market is just to set the expectations. And we'll come back around to talk this in a minute when we talk about buy signals too. But one of the things, if the long-term posture is bullish, but the intermediate posture is bearish, one of the things that investors might consider doing is when they do see a buy signal on their stock, they might go in with like half or a third of a position. We've had people asking about this, disorderly saying, how do you pull up the arrows at the top of your chart? These arrows up here, they just come up when you go into that grid, okay? Otherwise, they aren't there, all right? But the point is when the market's a little bit bearish, especially if the intermediate term and the short term are bearish, people might tend to be a little bit more conservative in their position sizing. If they're willing to risk or invest, say, $500, maybe they invest $250. If they're willing to invest $1,000, maybe they go in with $500 instead, until these postures start to come back around when everything's bullish. Because ultimately, when we buy something, sure, we want that to go up tomorrow and every day after we own it, right? We don't like seeing our stocks go down. All right. But again, fairly simple process. The 10's below the 30, we're intermediate bearish. And then we click the arrow again. And this is like one of my favorite little tricks. These red and green arrows here, again, they're part of this script that I just shared with you. And Barb gave me a note right there, right? No, that's not it either. Yeah, that's really weird. Anyway, to share that, it's just not coming up. I'll have to check onto that. The short term, these red and green arrows are part of what's called the Williams fractal indicator. It's part of the script that I shared. And the reason I like this is it really is helpful in helping people see the short-term highs and lows in the trend. Okay, now if we go back to the very, very basics, what is an uptrend? Well, an uptrend is a series of higher highs and higher lows. A downtrend is a series of lower lows and lower highs. And then a sideways trend is when you get kind of a mix of those. It's higher high, lower low, lower high, higher high. It just goes back and forth. But here's our interpretation here. Let me move this over just a little bit. Here's our interpretation of this third market posture chart. Is we're looking at a 3-month daily. These arrows are going to help us see the highs and lows. And probably after today, we'll have another arrow right up here where yesterday was our short-term high. Those of you that have been candle theorists, if you go to Barb's Getting Started with Technical Analysis webcast, she'll tell you about candles. And she's got a lot of great little videos on candle patterns, in fact, in our bite-sized content playlist. But that's called a shooting star candle pattern there. And after it's gone up a little bit, well, generally that's a bearish reversal signal. And we certainly got a bearish drop today. The markets are down a little over 1%. But what are we seeing here with what's our series? Series of higher arrows? Nope. Series of lower arrows. Lower arrow, low, lower low, lower low. high, lower high, lower high. So our short-term posture is also bearish. All right, so this is what the market's doing right now. And again, if all you can do is buy stocks, and for most of us, when we first start investing, that's really all we know how to do is to buy stocks. We can't short stocks. We can't do anything really bearish. And so, one way to use this type of posture or trend analysis is saying, wow, I've got some bearish types of things going on. If I buy something tomorrow or if I buy something today, there's a chance that it might just keep going down for a little bit. And if that feels really uncomfortable, then you could just completely stay out of the market until your postures start to get bullish again. Or you could say, you know what, I'm going to kind of dip a toe in the water and I'm going to go in with these smaller positions. All right. All right. So just kind of looking through here. The question about how to maximize the sell. Anytime you right click on your chart down here, it'll say restore cells, or it'll say maximize sell if you're in the grid section there. All right. So this is step number one. Know what the market's doing. Just because the market's doing this doesn't mean it will continue to do that, and doesn't mean that it won't continue to do that. Or we're just trying to analyze what's going on right now. Okay. What was step number two? You guys remember? Let's go back to our Word document here. Step number two is which sectors are the top 3 sectors. Now, again, I have a script that I shared that's there in the chat. It's also there in the description if you're listening to the recording. But this script here is a column header, and it'll give you what the 3-month % return is for anything you're looking at. And I've plugged it into the sector watch list. All right. So this sector watch list, number one, if you go to the watch list gadget, there's actually a public free sector watch list right here, S&P 500 sector indices. Now this one, when you're using these public watch lists, you can't modify those at all. So what I actually did is I took this watch list with the symbols that are over there. Oops. So that's all of these number 10, 15, 20, and so on symbols. And then I created my own watch list and I added the SPX in there so we could see, the SPX over the last 3 months is down about 2.5%, but energy is up 33%. Utilities is now a new player in the top 3 sectors. And materials is still up there. We've been doing this a couple times a month over the last 3 or 4 months. We've gone through this process together. And so, we identify those sectors, and I'll just write them in here. So energy's first. Utilities actually is now second. Utilities. And then materials is in there, and it's been in there a while. All right. So those are the top 3 sectors. Now what do we do? Well, let's go back to our page. What's the market doing? We did our top-down or market posture analysis. We identified which sectors are the top 3 sectors. How did we do that? Well, I didn't do it in this class, but we've added that column header the last 3 months. And the idea here is which sectors are outperforming the S&P 500 and which ones are actually the top 3 sectors in the last 3 months. And then we just go buy stocks in those sectors when they have your buy signal. Now, everybody gather in here real close. Come in here, listen. When I first started trading and I started learning about buy signals, I thought, okay, Mr. Mentor, I had a lot of people that I asked questions to. I said, Mr. Mentor, come over here. What's the best buy signal? Just tell me that one and I'll use it. So gather in and I'm going to tell you what that is. There isn't one, okay? And it took me about 2 years to accept that there's just not this perfect buy signal. And so, when I'm looking at the stocks, you just have to identify your buy signal. Now, we've gone over a couple different ones in the last several months of teaching this webcast, and we have a really simple plan called the 2 green arrow plan. And so I'm going to change my chart to that 2 green arrow plan. There's a link in the description for this exact chart. Okay, it has a 50-period simple moving average. This little purple dashed line is a moving average envelope that's set 1% below the 50-period moving average. And then we have this indicator down here that's called a MACD histogram. And the easiest way to think about that is just a momentum indicator. You know, when it's rising or green, generally price is going up. When it turns down and falling and we get red arrows, price is usually coming down, okay? So that's what that chart looks like. And what we want to do now is find stocks in these top sectors and just see if they have a valid buy signal. Okay, so I'm going to go over here to the scan tab, and Wiley chatted in a minute ago saying there are a couple scripts that I've got in there for scans that use a moving average and the MACD. This one I'm actually and that scan that has the studies only works in the live account, okay? But we figured out a way to essentially do the same thing in our paper money account so we don't have to go back and forth by adding these two columns, okay? And again, I chatted these in at the very beginning of class. These scripts are also in the in the description of the webcast. And so we have one column that allows us to see very quickly whether the stock's above the moving average or not, and very quickly whether the MACD is green or not. So what I want to do here is I want to do a search or a scan. Let me reset this real quick and I'll just show you what I did. Okay, so this is usually the default right here, and I'm going to shrink this down. So net change, I don't really care about the net change, so I'm going to get rid of that one. Volume, I do like to look at stocks that have about 250,000 shares or more. So I'm going to put 250,000 shares of volume on there. And then the last, like the closing price, you can just put in $20, like a $20 minimum stock price or something like that. Maybe depending on the account size, you might even do a maximum of like $300. But I'm going to put $350 on this one for now. So that's our scan. Okay, this is just, really easy parameters here. But what I've done is I've added these columns. So when you add those to your, open shared item, they'll show up on this little gear. And so you just want to add those to the number of columns in the scan results. And the first one, if you name them the same thing as I've got them, it'll show up right here, above the 50 SMA. And then if you go down to the D's, so just DAY. So days, MACD's green. Okay, so those are two columns that I've added here. And what that does is this now allows us to use the paper money to kind of run a scan in really anywhere that we want, kind of using studies without having to use a study component up here in the, in the filters, because the study filters don't work in that paper money. Now, one of the things I do want to caution you is if you do this with a lot of like potential stocks, sometimes at some point you're going to run out of space. It'll say, like the selected things have been exceeded. So what I like to do, and this is the point of identifying these sectors that are performing here, is scan in. Okay, so I'm going to come down here to industry, and then we're going to go to energy and select all energy. That's the first step here. Scan in energy, and then we've been using the S&P 100, but I'm going to bounce this out to the S&P 500 for today. And so by doing this one at a time in the sector, you're kind of limiting the number of stocks. Instead of seeing all 500 stocks in the S&P 500, we're just looking at the energy stocks in the S&P 500. And then we usually don't run into a data problem of getting all of the information over here. So hopefully this works. Let me scan this. And so did you see how it was loading that information? So what we're doing then is we're taking a look and saying, okay, well, what stocks actually have, some green arrows? And so we've run this search. And what I'm really looking for is just the MACD and the above the 50 period moving average, because it's got to be both, right? So, most of the stocks here are above the 50 period moving average, but there's only one that has like a recent buy signal on the moving average, and that's FANG. These other ones have been above the the MACD's been green for maybe a while, but I want to take a look at FANG with you today because we're going to buy this one. So FANG, it's in the energy group, which we identified as a top 3. And the rule, I'm going to go backwards a couple days here. The rule says to, buy stocks in those outperforming sectors when it has your buy signal. Now, I can't tell you what your buy signal is or even should be. What I think you should do is I think you should practice and experiment with some different buy signals. We're using a very simple indicator-based buy signal. Most everything's a variation of a bounce off support or a break of resistance. Those are kind of technical analysis terms, but once you define what that is, then you just have to have the discipline to act on it. Okay. Now, the challenge was when I first started is like I would see a buy signal and I think, well, I don't want to get in that and lose money tomorrow. You guys ever felt that way? I don't want to buy it today and have it be down tomorrow. Well, guess what? That's very common where we get a buy signal and we buy it today. We feel great because we have green arrows or we have a bounce or we have a breakout. And then the next day it's down, and then it's down again, down again, down again. Well, that's still welcome to the market. That's just kind of how the market works. All we're really concerned about is, did it have a valid buy signal based on our own rule set? And did I position size that in a way that if it does end up getting stopped out or I have to sell it in the future for a loss, is that loss acceptable or not? And that's really where the important part is determining, what is important for your loss. How much loss can you absorb and still feel like taking that trade the next day? Okay. Now, in our example, we're using 2 green arrows as our buy signal, and we're pretending that we have like a $10,000 portfolio and we're investing up to 5% of that portfolio in any one position. Okay. So more expensive stocks, we're going to buy 1, 2, 3 shares. Less expensive stocks, we might buy 5, 10, 15, 20, 30 shares. Okay. But let's go through this together on FANG because we know it's in the energy sector. We know based on that scan that it theoretically has 2 green arrows. And what I did is I just zoomed backwards because I want to go through this with you together to determine when and how we buy this. All right. Now, another thing that's really important here is you have to understand that we're trying to buy uptrending stocks. So our very first rule is that green line needs to be rising, which I think we can all agree that that's rising pretty nicely over here. And then we're just looking for a green arrow on the moving or the MACD. If the stock price is above the moving average, that's a green arrow. Okay, that green arrow actually on FANG happened way back here on the 21st of January. And how long is that green arrow green? Well, it's green until it turns red. Okay, so my question now to you, and this is the process that I want you to go through every single day when you're looking at your stocks or looking at your watch list. Look at the right side of the chart. I'm just going to put my cursor in here so it's a little bigger. Look at the right side of the chart and just ask yourself, do I have 2 green arrows and a rising moving average? If the answer is no, guess what? Your analysis is done. Okay. So we go forward the next day. MACD, it's rising, but that's still a red arrow, right? It'll give me a green arrow when it turns green. So do we have anything to do? This is on the 13th. So this is last Friday. Nope. We're done with our analysis. Literally seconds or less than a second. Okay, next day. Okay, this is the 16th, which I think was Monday. So do we have a valid buy signal here on the 16th? Well, MACD is still red. Moving average is rising. The stock's above the moving average, so that's green, but this is still red, so not a buy signal. Okay, next day. Well, it's pretty clear, I think, that we got a green arrow on the MACD, and that was yesterday, the 17th. And the stock actually kind of broke through, made a new high. And then here we are today. So is this a valid buy signal today based on our rule set, which is, not necessarily your rule set, but that's a valid buy signal. So we're going to go ahead and place an order to buy this. And this chart setup makes this really easy. That moving average envelope right there, that little purple line that's now highlighted, that value's at 164.31. That's where our stop's going to be. So remember that number, 164.31. We're going to right click, just right up here about the close, buy custom with stop. And if you move your cursor back up there, you can see what the, that stop number is if you forgot. So 164.31. Let's go in here and put the closing price, 189.68. That's the closing price today. Now we'll want to watch that because if the stock gaps up tomorrow, it won't fill unless it goes back down below 189.68. And that's okay. So you'll have to evaluate whether you're willing to pay a little more or not. If it opens lower, then that limit order will fill. And then our stop, we said, was at 164 and change. Is it 81? Oh, 31. And we'll make that good till canceled. Now, how many shares can we buy? Well, if we're willing to invest up to $500 per position, we can only go with 2 shares over here. We're going to link that. Let me shrink this down so it's a little easier to see everything. So we're going to buy 2 shares. We have a limit order to buy. We have a stop order to get stopped out. No guarantee we're going to get filled at 164.31. Hit confirm and send, and then review your order. Buy 2, limit order, stop order. I like to look at this buying power effect just to see how much of my portfolio is being used for this trade. And I like to see that that's less than 500. And then we have a group called 2 green arrows. So we're going to send that order off. And now we have an order to buy a stock that was in a top performing sector, right? Okay. So let's take a look here and go over to the scan again. And let's run this scan again. Now, I don't have to go in and redo my volume in my last. And volume, just so you know, this is a criteria that's actually most valid when the market's open. Sometimes, depending on how late after the close it is, you may not get any data on the close or the volume because the market stopped trading. So just be aware of that. This scan typically works a little bit better when the market's open, but you don't need that criteria necessarily to get the scan to work. All right. Now, what was the other sector? Well, utilities. So we go scan in instead of energy. Let's go down here to the buy industry, go down to utilities, and then let's select all utilities. And let's run the scan there. Okay, now this one's come up with a few more. And this one looks like we have several that have been trending up for a while, but all of these are showing that the MACD is still red. Okay, now I ran this a little bit earlier, and I did get some stocks, so I want to take a look at those. Consolidated Edison right here shows a red arrow on the MACD. So let's take a look at that one because it actually had a green arrow earlier. So let's take a look at that one. Okay, so and this is just maybe a testament to sometimes that's those scripts aren't 100% accurate because this one's still green. So this one actually has fallen off a little bit since the open. It opened up here, sold off. That's why we have a red candle, but let's zoom in. Now, the buy signal day happened here on the 13th, but the green arrow on the MACD is still green, and so this is still a valid entry signal. So you'll have to decide. Now, this is important for you and your own trading, is like how close to the green arrow on the MACD do you want to try to buy something? Well, life happens sometimes. Sometimes we don't have time on a Wednesday night to go through our watch list and look for buy signals. Maybe it's on Friday that we see, oh, okay, well, that happened a couple days ago. So you just have to decide, how far back are you willing to go and buy that? Interestingly enough, though, like if we bought on the close this day, the 13th, what was the closing price? You guys see that? So on the 13th there, the closing price was 114.88. And if we buy the stock today, we actually have a little bit lower entry price opportunity. So, sometimes the stock will move up and down around that buy signal. And so, this will help you identify, how you want to buy that. Here's the rule that we're using. the green arrow is green until it turns red. So I could have bought this on the green arrow day. I could have bought it the next day, or today. So valid buy signal. So again, what do we do? Well, let's remember the 107.08 is where that moving average envelope is. We're putting our stop 1% below the 50-period moving average when we do our initial buy. We put our cursor up here near the closing price. Do a right click, buy custom with stop. And we're going to go, let me shrink that back down. You know, we got $113, so we can probably go in there with about 4 shares of that. We're going to put the limit price at the close, 113.53 in this case. Then we're going to come in our stop. If we put our cursor back up here, we can see that little purple box comes up and tells us where the moving average is. You can also see it right here, like under studies right there. See the 107.08. So like when you have your cursor on that day, it'll show you where the values are. But 107.08 is going to be our stop. Then we'll make the stop good till canceled. We'll go ahead and make our buy order good till canceled. We'll hit confirm and send. And we buy for 113.53. We have a stop at 107.08. No guaranteed to get filled at that price. Putting about $450 into that position. Send that off, and now we have a working order for tomorrow. All right. Okay, one more of these to do, and then we'll be done for today. So our other sector is the materials. So what do? Well, go up here. Let's change utilities to materials. Go down to the by industry. Go in here to materials, and you select all materials, and then we can scan here. Okay, yeah, there's some sort of data feed going on here with this. That's interesting. So something's picking up with the market being closed. But I ran this one earlier today too. And APD and MOS came up in materials. So let's look at those together. But this is one of the challenges sometimes in paper money, or when the market's closed, you'll see some of these data little glitches. All right. But there were 2 that I found. APD. So APD, okay, the moving average is rising. If we didn't know what sector this was in, let me show you real quick. This is kind of cool. Analyze tab, go to fundamentals and type in that symbol APD, and then you can see where it is. APD materials, which is what we're looking at. Okay, moving average is rising. MACD turned green about 5 days ago. So is it a valid buy signal still or not? Yeah. You know, I don't know if it's going to go up or down tomorrow. Don't really care, right? We're position sizing around an acceptable loss, and we just go through the process again. So let's shrink this down. Let's do this quickly. Okay, put your cursor there. What do? Right click. Then what? Buy custom with stop. Then what? Well, 281, we divide that into 500. We'll go with what? 2 shares would be a little bit over 500, but I'm going to go ahead and do 2 shares there. And then we need to put our limit price to buy. We generally just take a look at that closing price, 281.42. I like to make those good till canceled. And then how do we get our stop? Where's our stop going to go? Well, you can put your cursor right up there and see right below studies, it says 271.80. Or if you put your cursor on that, the little purplish box comes up on the far right, 271.80. And make that good till canceled. Then we hit confirm and send. And 2 shares, a little over $500, which we knew that was going to happen. Stop at 271. It's in our arrows. We're going to send that order off. All right. So I see there's been a few questions. I think I answered those. Barb's done a good job of answering the questions. If you're watching the recording and you have some questions as you go through this video, there's a YouTube comment section. If you ask a question there, I'll answer it. In fact, I'll go back through the chats here today, and if there's other questions that are broadly, applicable, I'll probably repost those with the answers to them in the YouTube section. So be sure to watch those. Also, remember summarizing kind of what we did. This is a beginner's guide to stock investing. Identify 3 simple steps to buying the stock. What the market's doing, identify those top 3 sectors, and then buy stocks in those sectors that have your buy signal based on, whatever that is. We used our 2 green arrows stock plan today. Of course, no guarantee that those stocks are going to make money, but this is just a simple process that new investors can use to get the ball rolling, and then you'll probably refine your rules as you go forward. So hopefully that's helpful for you today, everybody. Next week we'll probably go over monitoring our positions a little bit. We did have some stocks that fell below the moving average, you can see, so we might need to adjust some stops on those. But have a great day, and we'll see you next time. Thanks, everyone.